well, I know I'm still in the S&P, so I'm happy with that. I just trailed
Oh,
to break
nice.
even on that. But I'll
Oh, very
probably
nice.
further trail at some point after this stream. I just wanted to ensure that I wasn't going to get stopped out. But yeah, just in
That's
S&P
awesome.
for now.
That's awesome. S&P 500 is such a monster right now. It had like a big overnight follow through move off of all that volatility yesterday. Of course, for those of you guys who missed our streams yesterday, we covered the press conference that followed Jerome Powell, testifying in front of several people on the panel that had questions for him. And long story short, the market really liked his commentary. Again, we're at a very different point than we were perhaps a year ago. Now, the Fed is kind of taking it meeting by meeting, whereas they used to be saying, we see no end to inflation in the short term. We're going to keep raising rates. Market didn't like that so much, but yesterday, again, we have the opposite tone kind of coming in, where it does seem like they're softening their, there's no immediate danger, I guess, to what the Fed is seeing right away. So again, markets love that. Frank, you're long S&P 500. You got stopped out for break even on gold. Sounds like you're playing those two better than I am. I do have, I think you might have seen, I've sold some puts on indices, but for the most part, I'm not, I don't own any strict trades open on NAS or S&P, but I was looking for pullbacks. I think I might have missed my shot here because again, the S&P 500 and NASDAQ breaking out. And that Dow, Frank, that Dow is just insane right now. What do you think on Dow? Do you think the Dow continues to kind of outperform like it has been, or what do you think?
I mean, I guess if the blue chips are just doing better earnings wise, I think that's one of the things pushing stocks higher. Plus the good economics news, because usually you would think, okay, because good numbers are coming out, the Fed's probably going to start to, I guess, be more aggressive on the rate policy. But that was, what we thought before. Now most people are expecting the Fed to stay where it's at. I think the Fed watch tool is pretty high in expectations for a pause in August or the next meeting. So just good economics numbers now, I guess, just means good news overall for the stock market. And the Dow, I'm not really sure entirely why it's outperforming everything else, but it's kind of rare to see.
Yeah, it is interesting to see. Of course, what we're referencing, guys in the audience who are newer to indices side of things, the Dow is traditionally used as kind of the value index, right? It's full of Walmarts and Coca-Colas, like the really stable big companies in the United States. The S&P 500 is of course a broader 500 different stocks that make it up, and of course the Nasdaq is mostly tech and some finance stocks. So Nas tends to be the most volatile. So it's interesting to see the value stocks performing the best. Anyways, Frank, to also follow you on that, it's interesting too that when we take a look at retail sentiment, here it is almost without fail every time. Retail traders are super short the Dow, despite it being the best performing index. Very interesting. And it goes perfectly in order. Look at this, S&P 500, the second best performing, second most shorted, and NASDAQ, the third best performing, the third most shorted. Very, very interesting to see that. So what we're looking at for those of you who are newer to the streams, we do like to track or keep an eye on retail positioning. This shows us what the amateur traders on average are doing with their positions, what they're buying, what they're selling. And I find it really interesting that as the indices continue to run higher, at least on FX brokers that we pull from, there's a huge lean to being bearish these strong rallies. And it does ask the question, Frank, is there some big short squeezes going on these indices? And again, how far can they squeeze higher?
Did you know that you can watch Trader Nick live stream every morning, Monday through Friday, with guests from all around the world? Each morning, right here on the A1 Trading YouTube channel, we put on a live show where Trader Nick, along with some very special guests, go over their charts and ideas for every kind of asset. We do a live reaction to news drops and do analysis immediately following. You never know what's going to happen during one of our streams. So come be a part of the live stream community. You can find our live streaming schedule on the A1 Trading Twitter account each week so you never miss a news event.
A short squeeze? I don't know. Usually you would see that for stocks going to the downside, right? Or am I thinking the wrong thing?
So short squeeze meaning all the shorts, all the people who are short are getting, they're getting beat up by a move higher.
Well, I guess you could say that, but I'm not really, when it comes to retail sentiment, I don't really look at their positioning. I kind of just focus on what smart money's doing. And
Sure,
they're kind of doing the opposite, I guess. So I don't know if you could call it a short squeeze or not, but you'd probably know better than me on that.
Well, it is mentioning smart money tracker. I mean, it's an interesting thing to study as well. You've got this is another, in my opinion, this is kind of the concerning side of the indices right now, is that, Frank, we've seen a lot of buying going on things like we saw for a while a lot of buying on like the NASDAQ and the S&P 500 and the Dow, but we've since then seen a little bit of slowdown in that, and now actually staying kind of stubbornly on the short side of the S&P 500. This is, of course, the hedge funds from the COT data that we're tracking. I don't know about you, Frank, but that to me just signals like, okay, just be very careful that you're not chasing this market, because again, a lot of smart people are saying that it is kind of overextended, and I'm not looking to short it myself, but does that kind of raise some red flags to you as well when we get these screaming up moves? Or do you kind of just say it is what it is, it's running strong, stay with the trend? What do you think?
I mean, it always does this, and it's always the same case. Instead of chasing price, rather you'd probably want to follow price, as in you want to see where it's going to go, and if it confirms something like, say, a break higher or a pullback and then a rebound from that, and follow the trend, follow smart money, follow what they're doing. The majority of them are still short, but over time we've seen change for the past several weeks, maybe months now, where the majority of the time they're just getting more and more bullish on this index, on stocks in general. But that's because they had a whole year of being long dollar and a year of a bearish market in the stock market. So
Sure.
just things unraveling, I guess, and just a shift in sentiment overall. So
you mentioned the dollar, Frank. I just wanted to pull up the chart here. Dollar, speaking of today, some economic numbers that kind of bounced a little bit on the dollar, but I'm still pretty bearish on the dollar, especially as we pull back into some of this structure. I think that there may be some opportunities. I mean, this is why, you and I are looking long indices, long gold. It is somewhat of a play against the dollar. So I don't know. I kind of have, this is I keep coming back to the dollar for my trade setups, even though of course I'm trading gold and I'm trading the NASDAQ and I'm trading the S&P 500. I have like a close eye on my second monitor all the time on the dollar index, because I want to see if this level cracks. If this thing rolls over, I want to be in a trade. And if this level breaks out and makes a move higher, that's probably going to be where I take my second trades. But I'm probably not going to take any trades in no man's land, if that makes sense. So I'm almost like basing my trades off the dollar right now. Are you looking at the dollar at all, or do you think that, is there that possibility that the dollar strengthens while the indices strengthen we saw a couple months back?
That is possible, but I'm looking at dollar in terms of dollar pairs, as in I would say euro dollar right now. The pullback on that chart on the daily looks pretty good. I'm pretty bearish dollar overall, so I don't think any kind of, I don't know if we see a close on that recent candle that we just looked at. I guess it could suggest upside, but I'm not really looking to trade any upside on that, because I think it's very limited for the dollar at this point. Euro dollar looks good to me. If we can see a pullback in a completion to that recent top or that trend line, I think I like a long play here. But this initial reaction of just being bearish on what the Fed did yesterday, leaving the indication that they're going to pause, And then euro today hiked, but they're still battling stubborn inflation, like more so than the dollar. So who's going to be more aggressive? I think euro in this case. So I'm bullish on this pair, but we're just gonna have to wait for some kind of confirmation on the technical side. But yeah, not bullish dollar.
Yeah, no, I like that. I like that analysis, keeping it really simple. You have the two central banks, and when we talk currency pairs, that is, of course, what we generally gravitate to is, behind the scenes, guys, on the software design side, when you guys see us talking about the tools that we're building, Frank and I yesterday we spent like an hour just on a whiteboard, just writing out calculations for how we want to score things. And that involves kind of like really digging into key metrics, like for example, like really studying inflation. And when you look at inflation in Europe, in fact, let's do it. Why not, pull it up if we have the data. So let's go to the central bank forecast. This page takes a second to load. But the point is, when you're taking a look at the two central banks, right? You have to understand central banks are going to raise rates to squash inflation. They're going to cut rates to increase inflation, to get the economy rolling again, right? Right now, the US is seeing the results that it wants, but Europe is still kind of behind in that journey. It likely will follow suit with the US, but they're behind in that. Expectations, this is a tool that Frank and I have put together. The central bank forecast allows us to get an idea as what projections are looking like for central banks. What you'll notice here is that the euro area does not have any projections right now to cut interest rates. That is a slight different story than the US expectations, which are for interest rate cuts to occur in the back half of 2024, and that we've somewhat reached close to the peak of where interest rates are likely to go. Now, why does that matter if you're a currency pair trader? Well, if you understand one central bank is likely to be more hawkish, meaning probably their currency goes up, versus a dovish one, there can be some excellent extra flow behind your trades. If you're looking at purely technicals, that's fine, but oftentimes understanding kind of the fundamental back end, the backstory behind of this and where central banks may go next with their plans can be really, really powerful. So that is, of course, what we're trying to illustrate with the software tools that we offer here at A1 Trading. Miko, you said NZD USD. Sorry, there was a little bit of delay there for a second. You're trading NZD USD. Tell us about the trade. We'll let you share your screen and take over for a second.
Okay, sure thing. So yeah, I had a short position on NZD this week. On Wednesday, I believe I entered the trade. So yeah, I took a loss on this position. I was looking for some downside. I entered the trade on this candle here. Stop loss a few pips above the highs and was looking for a push back down to the lows and further as well. Had a nice trend going on the 4H and the hourly, so I was basically looking for the continuation of that nice little break and retest of this area here as well. Had some couple other confluences going for me, but yeah, it was kind of an interesting one because I entered the trade and we also had FOMC later that day, so it was kind of seeing, okay, is FOMC going to go for me or not? And I was kind of hoping maybe FOMC could push to hit my first take profit, go break even, and then maybe take me out the trade. But yeah, I had a bit of whipsaw back and forth, but eventually it did take me out the trade. So yeah, took a loss on NZD, but that's the only trade I've had so far this week. So quiet, but an L on NZD. So yeah.
Yep, fair enough. So I took a loss on gold. Miko, not so hot on NZD USD. But here's the thing, guys. I want people who are watching the stream, I want them to hear that stuff because the markets are not easy, and it's just so crazy to me that as a newer trader, you don't even realize that all these people on social media that only ever show their wins. They never talk about times that are tough or losing trades. They paint a really false narrative about what the markets actually are like. In reality, profitable trading is like having a slightly weighted coin, very slightly weighted coin that you just flip over and over and over. If you had 52% odds on a coin flip, eventually that profit is going to play out, but you're going to have tons of losses in between. That's the difference between what people think trading is like. They think it's like a 90% weighted coin, and the reality is it's like a 52% weighted coin, right? It's very slight edge over a long period of time. Anyways, Marco, are you doing better than Miko and I this week, or what's your have you traded anything?
So this week I haven't taken any trades. I was looking at the euro pairs especially. So this impulse right here. Just a second for it to load. But yeah, now we got a clear momentum shift, clear aggressive retrace with the final candle. And now my whole trade setup is kind of negated. So currently I would be looking for shorts. I mean, if I just measure this one candle, it's pretty much bigger than anything in the power price action. So definitely the sellers have stepped in. Same on the euro Japanese yen. I was definitely looking for a buy setup, especially after this descending channel. But yeah, my setups kind of got negated with the current live candles. So right now I'm just pausing a bit, just waiting for a bit more. Let me just run through the rest of them. AU is range bound, AJ range bound as well. The pound looking really good to me. This one had an ascending channel right here, so I expected it to drop, which it now did. So I would be looking for a short entry right here. And the final one is NJ, just very, very flat, very range bound, so nothing really. On my watch list currently, it's mostly EU and the pound, but didn't have any trades. I had some trades last week. One was a loser, second one was a break even. So yeah, this week has been pretty slow for my personal trading style.
Okay, fair enough. So Miko, you talked about your NZD USD trade that didn't go so hot. My gold trade didn't go so hot. Let's try and be, I guess, forward looking about what's next. What's the next thing you're looking at? Are you still looking to play NZD USD again, or are you on to anything else? What's on your watch list today?
Yeah, so with NZD USD, I'm no longer really looking to get into any trades. I'm keeping an eye on the pair, especially with this newfound momentum here, especially with the DXY as well. So I do have a bearish bias on the NZD USD. However, after clearing some strong resistance, we now got support beneath us. I don't really want to be selling into that area. So I'm kind of just backing off and seeing what happens. We're coming up to the end of the week as well. So I'll be looking at the daily and the weekly kind of closures too with this one. So I'm still interested, but nothing yet for a trade. I'm keeping my eye on AUD/USD as well. This one I was looking for some sells too, didn't quite get a setup, but I'm interested with this one because we're coming to a very, very big level on the daily chart, which price keeps kind of fluctuating and interacting between. As you can see, resistance once, twice, a third time. We had a big fake out to the upside above that level. We repeated that same action again above that level. We came and kissed the same high, came back down. And now we're struggling to break through. So I'm waiting to see how this daily candle will close. Will we close with a big wick to the upside? If that's the case, could potentially give us a move to the downside. If we close back above the level, then we've probably got a high probability of a push back to the highs there. So I'll be looking for a break and retest and a continuation on Friday or Monday, depending on I get the entry signal. So I'm keeping an eye on AUD/USD, but I'm pretty neutral right now, just seeing how price reacts with that level. Same thing with Aussie CAD as well. We've got a big old level here too, which potentially, again, big wick through the level on the daily chart. We're still 8 hours left, so nothing cemented just yet. But if we can hold that, possible sells back down to these lows. If we do break through, might see a push back to the high there as well. And I'm also keeping an eye on pound Aussie too. I'm looking to see if we can catch another higher low. Got some nice higher lows building up here as well with the trend line and this broken support here on the left. So I'm waiting to see what we can do coming to that trend line and that area of confluence. If I see some nice wicks, some nice rejection, I'll be looking for a buy back to the highs down the left. So those are mainly the pairs I'm interested going into the end of the week and next.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.